Welcome back, dear traders. Let's discuss fresh analysis and the forecast by InstaForex and analysts. As expected, the benchmark stock indexes closed on Friday with significant losses. The reason is the stronger than expected non-farm payrolls for September, which gave markets the food for thought. Amid mounting fears about further sharp rate hikes, the major stock indexes closed on Friday steeply lower. The high-tech sector incurred the heaviest losses. The Nasdaq sank 3.80%, the Dow Jones shed 630 points or 2.11%. The S&P500 dropped 2.80% intraday to close at 3,639. Wall Street investors began a new trading week with the same head edge. All three indexes traded in the red in the New York pre-market, due to the fact that the bond market is shut today on a Columbus Day. The key stock indexes are trying to recoup early losses. The S&P 500 is trading in the corridor between 3,560 and 3,740 points. The evidence of a strong employment was the culprit of sell-offs on Wall Street on Friday. The U.S. Labor Department reported that the U.S. economy added 263,000 jobs last month, higher than their consensus of 255,000 jobs. The unemployment rate slipped to 3.5% from 3.7%. Besides, average hourly earnings also grew in September. The actual employment data turned out to be higher than expected for 5 months in a row. The Red Hot report showed the 10th positive reading over the last 12 months. The figures prove that the US Fed, which aims to cool down the labor market in an effort to ease inflationary pressure, is still far away from its goal. It means that the regulator will hardly moderate its rate hikes. Apart from the non-farm payrolls, the stock market is weighed down by the high-tech sector. AMD and Micron Technology warned of would-be troubles with the logistics and the chips manufacturing. AMD stock plunged 13.9% because the estimates of the company's revenue in the third quarter are almost $1 billion lower than in the previous forecasts. Stocks of a Chinese high-tech giant Alibaba and Tencent dropped on a Monday due to new export rules imposed by Washington aimed at derailing technological and military progress in China. The White House introduced those export controls to cut Chinese chip makers from semiconductors produced anywhere in the world on American equipment. This move dealt a blow to stocks of Intel, Nvidia, Qualcomm, Micron Technology and AMD. Stocks of companies with a mega capitalization such as Apple, Tesla, Microsoft, Amazon and Meta traded mixed in the New York pre-market. The market is set to trade quietly on a Monday for a few reasons. First, the bond market is short. Second, investors are cautious ahead of a series of crucial reports. And this week, market participants are alert to the US CPI, retail sales, and the Consumer Sentiment Index and the Fed's minutes of the last policy meeting. The annual rate of the US consumer inflation is expected to ease to 8.1%, but the core CPI could have accelerated to 6.5%. Any evidence of easing inflationary pressure will help the stock market to reverse upwards, whereas high readings will worsen sell-offs. This week, investors will digest quarterly corporate reports from the U.S. leading banks such as JP Morgan, Citi, Wells Fargo and Morgan Stanley. They will provide their reports for the third quarter on a Friday. A few Fed's policymakers are due to speak this week. Moreover, the annual summit of the International Monetary Fund and the World Bank is on investors' radars. All in all, this week is jam-packed with important events. The US dollar opened with a gain since Monday morning. It's an index which owes strength to fears and geopolitical tensions, consolidated above 113 points following a three-day rally. The outlook for the US dollar is bullish, and the index is likely to trade in the intraday corridor between 112.70 and 114.20. The upbeat employment data cemented the likelihood that the US Fed will go ahead with its aggressive monetary policy. Last week, several Fed's representatives advocated for further sharp rate hikes to push inflation down, even at the cost of higher jobless rates and weaker economic growth. Today, investors will listen to the comments by Charles Evans and Lyle Brainerd. Fed funds futures indicate an 89% chance of a rate hike by 75 basis points next month. No doubt the inflation data could make Wall Street revise its sentiment on Thursday. For the time being, investors are buying the US dollar as a safe haven asset on the back of an escalating standoff between Ukraine and Russia, as well as the US and China. The USD CAD pair is trading steadily at around 1.3700 on Monday, and the loonie is giving in to its stronger American peer. The intraday corridor is seen between 1.3650 and 1.3800. Despite the growing strength of the US dollar, the Canadian dollar is showing resilience because it feels support from the fresh data on the Canadian labor market. The report released on Friday showed that the Canadian economy created more than expected jobs, and the unemployment rate fell to a record low. In the light of this data, Bank of Canada Governor Tiff Macklem said that there is a scope to slow the economy based on an exceptionally high number of job vacancies. And he also added that the ongoing struggle against inflation is the toughest challenge that the central bank is facing in the last 30 years. He assured the Canadians of the monetary policy's efficiency, which is expected to bring inflation down to the official target of 2% by 2024. Despite the optimistic and hawkish stance, the Canadian dollar is under pressure of falling oil prices. They declined for the first time since last week. Brent crude futures climbed 0.5% to trade at $98.38 a barrel, and WTI futures edged up 0.2% to trade at $92.74 a barrel. The crypto market is sharing pessimism on Monday. Digital assets are trading sluggishly in the red in parallel with the Nasdaq and the S&P500. Bitcoin has shed 0.6% by the time of recording this video. It's now trading at about $19,300, and most altcoins are trading quietly higher in sync. Ethereum lost 0.6%. Solana, Ripple, and Litecoin quickly followed suit. Bitcoin is expected to trade in the intraday corridor between $18,600 and $19,800. InstaForex team is keeping track of market developments to prepare fresh and accurate market updates and forecasts. InstaForex cares about your profits. See you online tomorrow.